like the first one is from Raditya. He asked, what actually determines the value of cryptocurrency? Yeah, so that's the first questions. And then the second questions, if in the future many blockchains are developed, will it have a negative effect on a country macroeconomy? So it's up to you if you want to continue your presentation, and you will.
We can answer them now. Yeah, let me maybe take the first one for the second. So what determines the value of cryptocurrencies? That is correct. So cryptocurrencies skyrocketed in the past. So and a lot of people say, look, there is nothing behind it. Yeah, it's just code. How can it be like $55,000? And one answer is that like it's more like a psychological perspective. Yeah, so like every asset in the end is valued under or by the people that use it. So it's the same for like if you have like a painting of Picasso or something. If no one would pay like millions for this painting, then it is also not worth millions, right? So and this is valid for every asset. Yeah. So same as for gold. Yeah. If not someone asked or said, okay, we're gonna use gold to as a trade currency for goods. Yeah. Then this like shiny yellow stone would be worth nothing. Yeah? Same look at the money bills. Yeah. Like the for example the $50 note. Like the underlying asset is not even cents worth. Yeah. But everyone is aware that this paper piece is worth $50, and you can get goods in exchange for $50 for that one. Yeah? So in the end, what determines the price of any asset is the community that believes in the value of this asset. Yeah. First thing. Second thing is that of course it doesn't seem like value in the beginning, but as I said earlier, you need hardware to run these nodes, and you need a lot of hardware if you want to manipulate the network. Yeah, but this is also true for just maintaining the network. So a lot of these miners that are the core of the security and the operation of this network, and they require a lot of hardware, and they need the reward of 6.25 Bitcoin to kind of survive and buy and maintain and pay their hardware. So in the end, there is also an underlying asset under cryptocurrencies and crypto mining, namely hardware.
Okay.
So because there are a lot of questions now coming up and they're quite long, maybe I'm gonna proceed with the lecture for the moment, and we're gonna put the questions a bit further in the back, and maybe someone of you can help me to figure out the most important and most relevant ones. Yeah.
Okay. Thank you.
Cool. So this is kind of the blockchain fundamentals, yeah. How the technology, where did it come from? How does it work? And now, and this is like valid mainly for Bitcoin, yeah. And Bitcoin is Bitcoin was the first cryptocurrency, as I said, but it's not like the most intelligent one, I would say, because in the end you can simply just pay with this one. And it serves, of course, as a store of value and as the first entry point into the network. But like a few years later, I think it was 2013, a guy called Vitalik Buterin came up with another proposal for a second cryptocurrency, which is called Ethereum. And he said, like, well, that's very nice that you have a payment tool here, but this technology is so promising, it can be so much more. I create a cryptocurrency which allows others to get into this crypto and token ecosystem and create own business models, own cryptocurrencies. And this is Ethereum in the end. And the core of Ethereum are so-called smart contracts. Smart contracts are not, maybe go further, smart contracts are not really contracts in that sense, but they're simply written code. Yeah, they are publicly available on the network, and in the end, they are simply if-then functions, as you know it from Excel. Yeah, so a very simple example would be like a Coke vending machine. Yeah, it says like if you receive €3 in the coin slot and someone presses the button Coke Zero, then the machine releases a Coke Zero. Yeah, and this is kind of a very easy version of this, what happens in smart contracts. Smart contracts trigger based on an event. They trigger transaction. Yeah. For example, if the end of the month is reached, yeah, please pay out the salary of the employee in cryptocurrency. Yeah. If it's raining the whole August in Germany and you cannot harvest your crops, then please pay the insurance to the farmer. Yeah. So these are event triggered code in the end. And therefore, there's a quite famous saying which says smart contracts are neither smart nor contracts. Yeah, neither smart is understood because, as I said, well, they can be complex. Yeah, but in the end, it's a simple if-then construct. Yeah, and nor contracts refers to the fact that if you compare it to a legal contract, which is defined as a voluntary, deliberate, and legally binding agreement between two or more competent parties, yeah, a smart contract is a computerized transaction protocol that executes the term of contract. Yeah, so they're very like much difference between the two, and which is why if you set up a token system or use cryptocurrencies in the ways that I will explain later on, you in most cases need a legal contract in addition to the smart contract, which defines kind of the legal framework and setup. And this is also why Vitalik Buterin, the founder of Ethereum, said once that he kind of regrets to adopting the term smart contract. He should have called it something more technical and boring, something like persistent scripts, for example. Yeah? So to take out this contract legal binding element of the definition, which is not the case for smart contracts. Yeah? So what are the benefits of these smart contracts now? So in the end, they are autonomous, right? So you don't need a broker, you don't need a lawyer, you don't need an intermediary, you just need a good programmer to set up the code. Yeah, they are safe. Yeah, since everything on the blockchain is encrypted and quite heavily, as I introduced a few minutes ago. The smart contracts and what happens there is relatively safe. It is backed. Yeah, not in the traditional way that you have it on a USB stick, but everything on the blockchain is immutable. It is there, so you cannot kind of lose it. It has speed aspects. So since it is fully automated, yeah, you don't need a lot of paperwork. You don't need someone that is kind of pushing a button. Yeah, but as soon as the August had like 20 raining days in Munich, then the insurance pays out the money. There's no one that needs to check this. Yeah, you have a lot of savings. As I said, you don't need a notary and a lawyer, so you don't need to pay him. And it is very accurate. Means that everything that is programmed in the smart contracts will happen according to the smart contract. So there's no room of interpretation in the end, and so there is no room for ex post errors. Since there's no manual work. I emphasize the ex post in this context because there are examples where when the token code is badly written, yeah, then of course you have errors in the code and in the execution. There was one famous example called the DAO, which was a token sale a few years ago at the very beginning of the blockchain, when the blockchain came up, and they messed up with their smart contract, and someone saw that and kind of triggered an event where a random hacker could pull out millions of US dollars of the smart contracts because the contract was malfunctioning. Yeah? And the DAO didn't survive a year, so they went bankrupt and shut down operations just because a programmer messed up the smart contract. So you need to be very safe and very sure what you program here, because it can have very intense drawdowns if you don't do it. Yeah? And just to give you an example, this is an own cryptocurrency in the end, and this is properly working. Yeah, I didn't program it myself. Yeah, but in the end, and we don't need to go into detail because I'm also not a programmer. Yeah, but in the end, what I wanted to show with this slide is that it is not rocket science in the end, but that like someone that is into programming and has like an IT background, I think he or she will be very, very quick in adopting this programming language, and will be able to program the code him or herself. Yeah? And why is this important? Because if you look at all the cryptocurrencies and ecosystems that are out there, 76% roughly are using examples like this. Yeah, so they are not the cryptocurrencies that use their own blockchain, for example, Bitcoin, yeah, or Cardano or Solana. Yeah, they are like 1/4 of them are only using their own blockchain. Yeah, however, 3/4, so 75%, 76%, they are utilizing an existing blockchain, doing exactly what I showed earlier here, writing such a code, utilizing mainly the Ethereum network to set up their own business, cryptocurrencies, whatsoever. Yeah? And this is the basis for everything that will follow now in the use case discussion. So let's go on and answer the questions afterwards. So the first use case, of course, and this is what you approached me with, is the use case of payments. But however, payments are just a very small fraction. Yeah, you can use Bitcoin blockchain technology for that. Sorry. However, it's only a very small fraction of the use cases, because Bitcoin and blockchain technology can do very much more. So we're going to start with the stable coins that I introduced earlier. Yeah, a stable coin is a cryptocurrency that is pegged to fiat money. Yeah, means that the issuer gives you the promise. Yeah, if you're gonna give me back my cryptocurrency, I will give you $1 out of my bank account. Yeah, and this leads to the fact that there's no fluctuation in the price, right? Because when something can always be exchanged for $1, then it is worth $1, right? However, cryptocurrencies are way easier to transfer than traditional bank transactions, and at very low cost. Yeah. So if you look at, for example, this is a screenshot from CoinMarketCap of yesterday. You see that among the top 10 cryptocurrencies, there are 2 of these stable coins. One is Tether, and the other one is the US dollar coin, and they both have a market capitalization of 68 billion US dollars and 32 billion US dollars respectively. Yeah? So this is like kind of the possibility to use blockchain and cryptocurrencies without the mentioned volatility for transaction. And there are others, for example, Stellar or Ripple, which are like whole blockchain ecosystems that are designed to solve some issues in the corporate banking world. Yeah? For example, they can be used for interbank clearing, or for clearing in the FX markets. examples, as I said, Quorum, Stellar, Ripple, and there are big projects at IBM, at JP Morgan. JP Morgan even announced or even distributed their own cryptocurrency. Yeah, so also traditional banks are now going into this space. And how this in the end works, for example, at Stellar, is that you want to send some Philippine peso to Nigeria, and they're gonna kind of convert the peso into US dollar, into Lumen, which is the cryptocurrency of the Stellar network, and from there to the Nigerian naira, so that in the end you as a person see, or as a bank, you see as a transfer from the Philippine peso to the Nigerian naira, but the whole back end in the end is converted by Stellar. So this is kind of the corporate banking world, and but there's also use cases for the end user. So from the World Bank study, which is a bit older now, but in the end they state that 1.7 billion people in the world do not have a bank account. However, 2/3 of these people, so 1.1 billion, do have a mobile phone. And this is where the cryptocurrency can help as well. So there are providers, for example, Strike, which is Mr. Meller. He's also the guy that introduced or that helped to introduce the Bitcoin as a legal tender in El Salvador. Yeah. And also, this is from Airfox. Yeah, in the end, what they offer is that you can send money to your family. Imagine you are like working in Miami and need to send some money to your family in South America or Mexico. You can use their technology, which is based on blockchain, or in this case on the Lightning Network of Bitcoin, to send money for free to your family. Within seconds. Yeah, it's quite instant. In contrast to your old alternative, which would be like going to Western Union and to like the old paper-based and bank-based and of course very expensive process. Yeah? So this is just like a short intro into the question of how to use blockchain for payments, but I would rather focus on other aspects which make this technology even more valuable to a lot of industries. So the second use case is tokenization. What is tokenization? Tokenization is the process of putting a real world asset or a commodity on the blockchain. Yeah, and there are a lot of use cases and examples that are out there what you can tokenize. For example, real estate. Real estate is really a big area where tokenization is used. So this is like an old New York Times article, I think it's from 2018 already, where a Manhattan-based real estate company tokenized a condo on the blockchain. So you can, as an investor, you don't need to buy like a whole flat, but you can invest, for example, starting from $1 in such a building and participate in the value development of this. Second thing, art and collectibles. So there was one announcement, which was, I think it's also 2018, a bit small here, yeah, 2018, where a picture of Andy Warhol was kind of tokenized, and you could then participate in the token sale. It was sold to 100 investors in the end. So you do not buy the whole picture, but you buy a percentage share of the picture and can from there on participate in the value increase of the picture. Downside is, of course, you cannot take the picture and put it on the wall in your flat because it's somewhere in a safe where the tokenizing service provider is. But However, as an investment vehicle, this is a very good opportunity. And another thing, and this is in my opinion one of the biggest advantages of blockchain technology, is that you can use it now for securities. Yeah, so the process in the old world, and to be honest, Germany is very traditional and very paper based in that way, is that you need a paper-based document for every share, for every security that you issue, and that is somewhere in a central storage. Yeah, and if you're going to buy or sell something, then there's a very long backbone and process to kind of sort out these documents and who they belong to. And on a blockchain, and this is a press release from 2020, I guess. Yeah, it is possible that you issue securities, and in this case, a digital Schuldschein. This is a German term. It's something like a loan agreement. Yeah, you issue this via a blockchain, and this is doable in nearly real time. And of course, also the liquidity and the trading is much easier compared to, and cheaper, of course, compared to previous times. So in the end, the benefits of tokenization, first is that you can fractionalize ownership, and this is especially interesting for assets that had like high economic buy-ins, for example, real estate or expensive art. You can fractionalize it into very small pieces. As I said, you can invest, like, if this is a design thing, yeah, but you could invest in pictures or assets like starting from $1, and this of course increases the market depth and also the liquidity, yeah, because I think it's very much easier to buy a fraction of a $30 million condo in New York instead of the whole thing, right? And another advantage is the global accessibility. Yeah, you can trade it 24/7, 365 days a year without downtimes, closing of exchanges or anything. The settlement is nearly real time. You have very low transaction costs, and what you don't need to forget is that these tokens are smart contracts, which I explained earlier. So it's programmable code. So you can code everything you want into this code. And this could be like, if we stick to the example of real estate, yeah, this could be, for example, if you own 10,000 tokens of this real estate, you are most likely an owner, and therefore you have access to the park garage or the gym, just as a very plain example. Yeah, and there are a lot of other use cases where you can utilize the fact that this is simply code, and you can encode a lot of things into these smart contracts. There are a lot of other assets that you can tokenize. Yeah, it's intangible assets, patents, licenses. It's metals like gold and silver, which is already in existence and has the large advantage that if you want to invest in physical gold, yeah, you don't need to have like the piece of gold and put it to your deposit box or safety box, yeah, but you can have like a tokenized version and someone else stores it for you. It's interesting in the area of consumables in terms of tracking and tracing of goods. Financial instrument I mentioned earlier, but also collectibles. I'm not sure, maybe some of you heard about this NFT hype that was going on, yeah, where digital artists sold their pictures for a lot of money. Yeah. I will give you just a quick example. Well, this is like from the European markets, but however, I think it's also valid for other markets, like what tokenization means in terms of saving potentials, right? If you look at the issuance of a security, yeah, for example, a company share or debt instrument, yeah, in the end, you have something between 35 and 65, which is of course quite a range, but as an estimate, yeah, of saving potentials, yeah. And this saving potentials does not come from the structuring, like the setup of this instrument, because as you can see, the costs are the same, and tokenized assets are even more expensive than traditional instruments, because you have like the whole legal setup, as you can see here, but on top you also need to have the programming and the token creation. So it's actually not the same, but it's even more expensive. But afterwards, if you go look at primary markets, yeah, so the issuance itself, the security, you're way cheaper, because you can get rid of all these issuance agents, and for example, so your cost shares are smaller. Same as for custody, yeah. Crypto custody is way more cheap than traditional custody. And also on secondary markets for the end user. So if you want to buy something on an exchange, it's way cheaper, because you can get rid of these brokerage fees, because you can trade peer-to-peer. So this is an example of like the benefits of tokenized securities. Another very important blockchain use case in the finance area is the so-called decentralized finance. And decentralized finance refers to an open source, permissionless, and transparent financial service ecosystem that is available to everyone and operates without any central authorities. That means you use traditional banking applications and products and put it on the blockchain. This can be lending, borrowing. Yeah? So you can just lend cryptocurrency somewhere and receive interest, or if you want to buy a new car, for example, you can borrow cryptocurrencies. You can use decentralized exchanges by not using a exchange that is kind of getting a large fee that you need to rely on, but in the end, it's peer-to-peer exchanging of digital assets. You have derivatives. Yeah, for example, put and call options, futures. This is all doable on the blockchain. And also an interesting use case, which I mentioned a bit earlier as an example, insurances. Yeah, you can insure against price risk, counterparty risk, and since it's done with a smart contract, you don't need to call your insurance agent and say, "Hey, I had a let's stick to the example of the farmer. I had a very bad August. All my crops are destroyed. I need my insurance premium." No, it's just it's paid out automatically. And as you can see here, the interest rates are relatively high. Yeah, of course, it's a risk connected to that, because the technology is new, and the service providers for this DeFi lending in this case are even newer. Yeah, so you have kind of a default risk. However, compared to the zero interest policy that is going on, and at least in Europe, this is very interesting. And there are a lot of opportunities in this ecosystem. Don't want to go into all the details on that, because I think the picture is quite colorful and a bit confusing maybe. But in the end, it's 4 layers. Yeah, the first one is the core infrastructure down here. Question: how do you get money and data into the DeFi ecosystem, where, for example, Bitcoin is a store of value, and also Ethereum with all the smart contracts, and also the coin Ether are kind of a good entrance point. Then you have the so-called oracles, which provide real-time information. Again, the farmer example: how should a blockchain know that it was raining 20 days in August, right? Therefore, you need these so-called oracles, where off-chain data, so to say, is provided into the blockchain. Then you have all the finance products, what I mentioned earlier. These are the insurances. You have the stable coins that I talked about, derivatives, lending, saving, and so forth and so on. On the consumer base, you have wallets, data providers, and then there are also some interfaces to legacy banking systems. Yeah, for example, Polymath and Harbor. These are service providers that help companies to tokenize their assets, their financial products, to get it into this ecosystem. And the ecosystem itself is growing. At the moment, so the screenshot is as of yesterday, we have $90 billion in the DeFi ecosystem, which is, well, compared to traditional financial system, relatively small. But if you see like how much it grew, so I think beginning of October, we talked about 1-digit billions. So it was something like 8 or 9 billion beginning of the year, and it kind of 10x'd within the last couple of months. However, there are of course challenges to it. As you saw in the very colorful picture, it's a very cluttered ecosystem. So you kind of need to know where you put your money, and that you get to the kind of reliable infrastructure providers. This topic was kind of changed in the end, but at the very beginning, these services offered a very bad user experience. So you needed kind of sometimes even programming skills to understand it. You have, of course, a high risk of user error, because a lot of these platform or comparison to your bank account, where you can say, or your credit card, where you can say, sorry, there was someone using my credit card, it was not me, or I sent money to wrong receiver, please undo this. This is not possible for blockchains. As I said earlier, it's immutable, and everything that you do wrong in the end is your fault and cannot be undone. So you need to be very careful what you do there. And it's still a bit of a poor performance compared to traditional finance systems. So Bitcoin, for example, is always said to have only, I think it's 7 transactions per second, while Visa card has 24,000. So just as a comparison. But this is like for the blockchain, but it also, of course, translates into the applications that are built on top of these blockchains. And this is a topic that is ongoing, that a lot of projects are trying to solve, but it's still not solved in the end. Number 4, startup financing, and this was actually the topic that I was doing my dissertation on mainly. At the time I started, 2017, there were these so-called initial coin offerings. What is an initial coin offering? An initial coin offering is a way to finance an early stage project. How does it work? The project or the startup discloses a white paper, which is like a prospectus light, where the information, what is the product, who is the team, what are you intending to do, are kind of included and available to the investor. And based on this information in the white paper, the investor invests cryptocurrencies. In later ICOs, you could also use fiat money or credit card, but in the end you invest cryptocurrencies into this project and receive crypto tokens of this project in return. And then you can either hold these tokens and use them with a project in the future, or you can trade these tokens on cryptocurrency exchange. And this is kind of where all the markets that you see on CoinMarketCap or CoinGecko, for example, come from. And when I started, it was quite an interesting market, because in the start, as I said, Ethereum was somewhere here, 2013, which enabled all these token sales, and it was very small. But then in 2017, here where I started my dissertation, in 2018, volumes and also prices went up. And for example, at in Q2 2018, the volume of ICO was with $7.3 billion, even greater than the IPO volume at the New York Stock Exchange, just to give you an example. And in the end, there are, and these are just some market insights, the largest ICO ever raised 4.1 billion US dollars. It was called EOS. And maybe what you need to know is that a lot of these projects did not even have like a prototype. Yeah? So you just invest based on a paper which is unaudited and unverifiable. You invest based on this paper in a startup that doesn't have a product. Yeah. And in this context, these figures, yeah, Telegram, you all know, these are very huge amounts. Yeah? Maybe this is not true for Telegram because they had a product already back then, but this is incredible. Yeah. And this is like a very interesting statistic that I mentioned earlier. So like 87%, nearly 90% of all these token sales were created on Ethereum using the smart contracts that I introduced in the last chapter. How does such an ICO work? So in the end, you have an announcement saying, look, we as a project launched project XYZ, and we gonna sell our tokens in a few months. So you kind of distribute this information in forums, for example, Reddit or Bitcoin Talk. Then you promote the whole thing. You have the white paper. You do marketing campaigns, advertisements on the internet mainly. Then the investors register on your website, and then in the end you have the token sale itself, where you get the funds and distribute the tokens, and in the end you list the token somewhere on exchange. Advantages, of course, from a startup perspective, are that you are globally available. It's quite quick and cheap to realize. So there are startups that are kind of developed that within weeks, yeah, while an IPO takes sometimes years, yeah. You have new target groups, rather young people and technology-affine people, and of course the topic of trading and liquidity, which I mentioned earlier, is also coming up here. However, at that time, it was quite shady, this ICO business, and you had kind of a legal uncertainty. There are studies that say that roughly 70% of the ICOs conducted in 2017 and 18 were scam. 70%, which is quite massive, and which is the fact why these ICOs are not conducted in this form today any longer, because then two other products or mechanisms developed. So the one thing is the so-called security token offering, where you use the same technique as the ICO that I mentioned, but you put an underlying asset on it and you comply to regulations. Yeah. So this gives the investor more legal certainty. And the next step was then initial exchange offerings. In the end, the same initial coin offerings that I now explained, but you do it directly on an exchange, and this exchange is covering all the legal aspects, do your KYC and default and so on. Yeah? And this is like what is at the moment going on, security token offerings and some initial exchange offerings as the new form of token sales or startup financing through cryptocurrencies. So I think a lot of information for you, and I would like to end my presentation with one last non-financial example where blockchain technology can really help people. Yeah? And this is in a refugee aid and in a refugee camp. In this case, it is in Jordan. Yeah, where a lot of refugees from Syria came to, and to give you some expressions, this is how the refugee camp looks like. This is the supermarket in the refugee camp, and this is the supermarket on the inside. And what happens in these camps in the end is, so that everyone gets food and water, is that the World Food Program distributes monies to the different refugee camps, and these refugee camps then give paper-based vouchers to the refugees, which they can use to go to the supermarket and buy food and water there. Yeah. So the problem is that the transaction costs are very high. Yeah, to print, to like transfer, you need to print all these paper vouchers. You need to collect them in the end, wieder convert them to money, and so forth and so on. You have a very low security, and it's very easy to manipulate. And because what someone that led this project told me is that there is a lot of kind of younger people that are stealing these vouchers from other people. And this is kind of bad, yeah, because then you have like a very small family who's cannot help themselves because someone else is stealing the vouchers. Yeah, so not a good thing at all. And in the end, you need to kind of audit and archive the whole thing paper-based. This is kind of a lot of manual effort. Yeah, and what the company in this case, the name is Determinants. They're sitting in Munich and developing blockchain solutions. What they did is they introduced the payment via blockchain in these refugee camps. So in the end, the World Food Program now is paying money to a blockchain. And the World Food Program and the refugee camp is then distributing this money digitally to the refugees. And based on this, the refugees can buy the foods in the supermarkets. Advantages, of course, quick, low transaction fees, a high level of security. It is transparent. You can do like a direct reporting. And of course, it was kind of a PR thing for the World Program, the tech scene then. And how does it work in the end is that the refugees get an account and the supermarket uses iris scanners, yeah, which is like kind of the best identification of an individual, even better than a fingerprint, yeah. And you go to the supermarket and then just get your eyes scanned and they see, okay, you have this balance on your account, please feel free to buy whatever you want. And very secure because no one can steal your vouchers anymore. Yeah? So very secure, very like a win-win situation, win for the refugees because they can buy in the supermarket without any trouble, and also win for the World Food Program because in year one, they served 100,000 refugees and saved 1.8 million US dollars. And in year two, they served 500,000 refugees and saved 9 million US dollars only because they got rid of transaction fees and all this manual working stuff. And of course, this money can then go back, can be reinvested to help the refugees wherever they can, instead of going to some archiving activities or other activities. This was just another example to give you a wrap up on how blockchain technology can help in a very beneficial way, also outside the financial world. And this would be it from my side. I gathered some readings here. If you want to understand some more about the crypto markets, go to CoinMarketCap. If you want to understand DeFi and the players there, go to DeFi Pulse. There are also some really interested, I really like the Binance Academy very much if you want to go further into different aspects of the technology. Read the Bitcoin white paper. It has only 7 pages and is very interesting to understand where this whole technology comes from. And if you want to buy your first fraction of a Bitcoin, go, for example, to Coinbase, US regulated, relatively safe, and start your way in the crypto world. Thank you very much.
Thank you very much, Stefan. It's so amazing knowledge today. Thank you so much. To be honest, Stefan, so we see many benefits from this system, the blockchain, just within 10 years. I mean, before at the beginnings, like no one really cares about this system, and suddenly it evolves very rapid and it integrates with the real market, isn't it? By tokenization asset. But Stephen, the thing is, in Indonesia, our government, especially central bank, is still not approving this kind of blockchain. So maybe we don't have kind of this flexibility in terms of using the benefit of blockchain and Bitcoin and cryptocurrency. But maybe if we go to buy something in the global market, maybe we can use. Yeah, so I think that's the disadvantage in this country at the moment. Yeah.
Yeah, but I think this is true for a lot of other countries. Yeah. So the whole topic of cryptocurrencies and blockchain is relatively new, and therefore regulators, not only in Indonesia, but all over the world, same as for Germany, yeah, or Europe, need to kind of understand the technology first, and then conclude what to do with it. And this is of course, a country to country decision. And my speech was more like generally, and no, of course, no investment advice or anything, but more like a general introduction of the possibilities which could be done with this technology.
Yeah. Okay. So now we can open the Q&A session, isn't it? Yeah.
Sure.
Yeah. Okay. Now we move to the second questions by okay. So by Domingos Ricardo, he said that okay, yeah. If the future many blockchains are developed, will it have a negative effect on a country's macroeconomy? What do you think?
Just trying to find the question, but
it's the second questions by Domingos Ricardo. He mentions the presence of digital money as a transaction tool will reduce the function of the central bank, making monetary policy ineffective. This makes difficult for central banks to accept cryptocurrency and prohibit them. Yeah.
Yeah. Understand the question, but okay. Two things to consider. First thing is the current volume of cryptocurrencies. If you compare it to fiat money and the central bank currencies, then it's relatively nothing. Yeah. So the fraction now is very small. On the one hand side, for the moment, I think this is not a threat. Yeah. In the long term, this may be different. Yeah, but this is why central banks are already investigating in this. For example, in China, there is already a central bank digital currency in existence. There will be a digital euro soon. Yeah, so the central banks are aware of the topic and already working on alternatives that they can issue a currency, for example, that combines the benefits of crypto, but also with the security that is, and the stability, of course, that is the aim of a central bank.
Okay, thank you so much, Stephen. Now we move to the third question. Yeah, I will try to find the third one, maybe from Gita Adi Pramana. Yeah. Okay, Gita. He asked 3 questions. So, just let me read one question. Yeah. So, is there a positive correlation between the use of blockchain and cryptocurrency? Since blockchain implementation is getting more widespread, but cryptocurrency is not accepted as a legal tender in most countries. Yeah, what do you think? So what will happen to blockchain if cryptocurrency finally banned from most of big countries like US, China, and Europe? Yeah.
Well, I think this is what I tried to outline at one of the very first slides, that cryptocurrencies are just one use case of blockchain technology, right? So in case, and this happened in China, right, with the ban of cryptocurrencies, and also in other countries, fair point. But in the end, the technology itself has a lot of more potentials, yeah, in the also the non-financial area. I just showed you in this case the refugee example, yeah, but you can also use it in supply chain, for example, yeah. For example, IBM and Maersk, they created a tool. It's called I forgot it, but in the end, they implemented a tracking of their containers, yeah, because with this technology, it's quite easy to understand where containers are on the ships in the world, where there is free space that you can rent. So it makes the shipping industry and the shipping of values and goods very much easier. And this is far away from cryptocurrencies and anything. And cryptocurrencies, as I said, is only a very small fraction of the use cases for blockchain, and therefore the impact should be low. I would argue.
Okay, awesome. Yeah. Okay, now we move. Okay, so this person he asked 3 questions. So maybe I just check whether there is another question from another audience. Okay, so now we move to the another person from Indra. Yeah, he asked about blockchain technology to solve these problems. Yeah, in terms of sorry, my screen is. Okay, so Indra saying that in Indonesia, underbanked aspiring mainstream class needs more financial services with 260 million population or 26 million population, yeah. And with a blockchain-based solution, address a business problem. Example, fintech. Yeah, now we have a lot of players in fintech, yeah, and e-commerce. And my question is, how about blockchain technology to solve the underbanked problems, yeah, and how to mitigate the data processing will be in place and valid from Indra. Yeah.
Okay, I think I did not get the question completely.
So he asks whether blockchain can solve the problem of people who do not have any bank account first, yeah, and then whether the possibility of blockchain to be integrated with other systems.
Yeah, so I think the topic of helping people that don't have a bank account, I answered in my talk. There are options for that. Strike, for example. I'm not sure because I'm also not a legal expert, right? If this is kind of allowed and accessible in Indonesia, so I cannot and don't want to comment on that. And the integration, if you look, for example, at the banking blockchains that I mentioned, like Stellar and Ripple, and there are ways to implement this into the traditional banking system. And so there are interfaces from traditional money, fiat money, into Stellar and Ripple. So there are integration potentials, but this is kind of another topic, I think.
Yeah, but I think if the traditional banking or the traditional financial system, they want to emerge with blockchain technology, they should invest more in hardware and this IT system, isn't it, for protection? Do you think so?
Say again the beginning, please.
Yeah, so if the traditional banking system, financial system emerge with blockchain technology, they have to invest a lot in hardware, IT. I mean, it's in terms of protection from hacker and cracker, isn't it?
Yeah. So in the end, at least investigate in the space, right? And this is what a lot of banks are already doing. Banks, central banks, governments. So a lot of players are investigating in this. It's more like a soft component or like a use case component. What you want to do with it. The hardware stuff, yeah, you could do this, but I think like hardware is not the primarily goal because big systems like Bitcoin, but also like Stellar and Ripple, they are quite safe, I would say, or relatively safe. And therefore, it's more like getting started with the space overall. Yeah, understand what are the possibilities, understand what you as a institution of whatever industry want to do with this technology, and then of course, if it makes sense, then you can also contribute in the security and safety of the network.
Okay. Okay, so we still have several questions, Stefan. So are you still willing to answer the questions?
Sure.
Okay, so okay, the fifth question asking say that ICOs do not require compliance with any regulatory framework and legal protocol. Most of them don't have record. Then what are the determinants of ICO success?
The determinants of ICO success. Well, that was back then an interesting question that I actually investigated in. So in the end, what drove this ICO hype, in my understanding, was that, to keep it simple, everyone wanted to get rich. Yeah, everyone wanted to find the new Bitcoin and get rich in the end. Yeah, and this was on issuer side, but also on investor side the case. Yeah, as I said, 70% of all these cryptocurrencies that came up there were scam, roughly. Yeah, so a lot of them just got the funding, millions of dollars, closed their website and got away with it. And it's quite hard to follow up on this at that time. Now there are providers like Chainalysis in the US, which are doing this fraud prevention and tracking of such cases. Yeah, but at that time there was no regulation, and people just, also on the investment side, wanted to invest a bit of money to a bit of money to get very rich in the end, and this is what kind of drove this hype, in my opinion.
So basically just pure on supply and demand, yeah, isn't it? Yeah, just
Yes.
pure market mechanism, no intervention at all from anyone.
Yeah, so in the end, like the token price itself was normally set by the team, like the project. Yeah, they said, we're gonna sell X amount, or no, we're gonna sell tokens at $1, for example, and there will be as many tokens as you are willing to buy. As an example. So and then yes, and then it worked as a supply and demand mechanism.
Okay. We still have another question from Prof. Sekaria, the head of Magister Accounting. Can you tell us how your government regulate the cryptocurrency in Germany?
Germany, actually on cryptocurrency itself, like if I buy cryptocurrency, there is no like regulation on that, so at least no heavy regulation. Yeah, I can go to some account, some crypto exchange, and buy like a bit of a Bitcoin. Yeah, in the end, of course, I need to put it on my tax sheet. Yeah, I need to it needs to be taxed. There are clear rules for that, or relatively clear rules for that. Yeah, so like from a private perspective, this is no problem. It's different from the issuer's perspective, yeah, because also the German regulator, BaFin, it's called, they of course learn from these the ICO run 2017 and 18 and took consequences. So most of the tokens that you issue fall under the German security law, which means that it is similar to issuing a normal share, and you need to align with the BaFin, so the German regulator, to get approval to create like a prospectus, at least in a narrower version. Yeah, so these pure, there are still the possibility of doing an ICO, yeah, where you don't need all this, but this channel is very small, and in the end, you probably get problems there. Yeah. So quite good steps here in Germany to, on the one hand side, get some safety and regulation on the topic, but on the other hand side, to allowing startups and industry players to use this to use the technology, but in a regulated framework.
Okay, thank you so much, Stefan. Is there any questions, guys? From the audience, do you have more questions before we close the sessions? So actually, before the participants, they asked like 2 or 3 questions, yeah. But I just mentioned one of them. So do you still have time, or are you going to have another meeting?
No, sure, one more is fine.
Okay, so maybe I will just ask one more questions.
Sure.
Okay. Regarding the blockchain technology, you said that it is decentralized. What happens if there is a failure on one of the hardware that used to store this data?
Exactly nothing. Because as I said, the Bitcoin network, sticking to the example, is distributed on 10,000 nodes, roughly, a bit more, a bit less, depending on how many are online. And if one of these 10,000 nodes goes offline due to network issues, due to hardware issues, it doesn't matter to the whole system, because every other node in the system has a copy of the ledger. And as soon as this node goes online again, it gets a copy of the new entries that it kind of missed due to absence of the other nodes.
Okay. Okay. I think it's enough for our sessions. Do you think so, Stefan?
Sure. So I would answer a question. If you're fine, then it's all good for my side. Yeah.
Yeah, please, audience, if you have more questions, yeah, raise your hand or write down on the Zoom chat. Okay, one more question, yeah, Stephen, yeah. So what do you think about the future of cryptocurrency? Is it possible for them to be the future of digital money? Or do you think CBDC and stablecoin have better chance since they are regulated or backed by underlying asset? Wow, okay.
Yeah, it's a good question, and I cannot clearly answer that, of course, because I cannot see in the future. I think, so my personal opinion is that cryptocurrencies like Bitcoin will never become like a legal tender in for example, in Germany. Yeah. However, I also think that the existence and the growing of these cryptocurrencies kind of created something, namely the awareness in Germany and then also in other countries, and also on a European basis, to develop something similar on a country basis. Yeah. So I don't think that Bitcoin and Ether become like the currencies of the future. However, I think they triggered products, for example, the central bank digital currencies, but also the application within the industry with some of the use cases I mentioned earlier. They triggered them, and this will have a positive impact on the economy as a whole.
Fantastic, Stephen. So I think we have wrapped all the questions from the audience here. I hope you don't mind to share your presentation with us. Do you mind?
I'm going to send you a version afterwards, yes.
Okay, thank you so much. Yeah, we really appreciate it. And I hope you don't mind if in the future we invite you for another event, maybe for international conference in the future. Yeah.
Sure.
Okay, thank you so much, Stephen. We really appreciate it. So we see that within 10 or 11 years, blockchain has evolved to become a very an alternative asset for us, yeah, and also helping us in terms of payments and also helping for non-financial sectors. Thank you so much, everyone. I will proceed to the MC.
Thank you very much, Dr. Nurhasuti Wardani and Dr. Stephen Romaika. As a token of appreciation, a certificate of appreciation will be given to Dr. Stephen Romaika. And also we will be giving a certificate of appreciation for our moderator, Dr. Nurhasuti Wardani. Thank you very much.
Thank you.
What an outstanding lecture we had today. We have now reached the end of today's webinar. Time sure flies when you're having a fruitful and interesting discussion. It has been a pleasure to be your master of ceremony of the day. I hope as this meeting enriches your knowledge and broadens your horizon, you are inspired to keep innovating and contributing in the field of accounting and finance for the betterment of society. Thank you very much for your kind participation. Good afternoon and have a great day. You may now leave this meeting. See you on the next webinar.
Okay, bye-bye. Thank you so much, Stefan.
Thank you very much.
And thank you so much for all attendees to this webinar. See you again.
Much. Thank you so much.
Okay, thank you very much.
So Stefan, some of my students attended our talk today. Yeah. So some of questions from my students. so they give you a very good question, isn't it?
Yeah, very good. Thank you very much.
Yeah. Thank you so much. I hope we can invite you for the international conference, maybe next year or maybe next 2 years. Yeah. It depends on the situations. And Prof. Sekar, actually, Steven, he really wants to travel to Indonesia if it's possible, yeah, for the international conference in the future.
Yeah, maybe next year, or the year after. This year was a bit bad from the.
Next year, we can invite Dr. Steve